From meme to utility, Floki has it all. NFT metaverse game called Valhalla. Floki University, DeFi, charity, and shopping. Floki is governed by the people, for the people. Floki, together there is no stopping us.
Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone a couple of minutes past midday, which matches the time that we've got UTC as well. Brilliant to see so many people on the stream today. We've got over 100 people waiting in the waiting room. We've got a lot more people than that on Twitter as well. So a very, very, very good morning or good afternoon to everyone wherever you are in the world. Brilliant to see some old faces on here, some regulars, as well as a lot of new people as well. If you've got any questions, please don't hesitate to be active in the chat. Do be respectful of other people, please. It is based around education, this channel. It's not a signal service, although we will be looking at some live setups today as well. So a big shout out to everybody. 2P, great to see you in here this morning, mate. Nit as well. Simon, great to see you there. Bull Crypto Trading, hello. Our lovely Erica as well. We can see everybody coming. Trust as well, Nit, 2P, legends, one and all. So, guys, I want to make today a little bit punchier for you rather than kind of going on too long. So it's a little bit easier for you all to digest as well, obviously, as the people that are going to be watching this on recording. So let me make this a little bit bigger. Good morning, Whack. Hello, mate. And we're going to start, for me, I just want to start taking a look at Bitcoin. All right. So, yeah, a little bit kind of messy, this chart at the moment, but let me just zoom out to a daily. And what we're going to do is we're basically going to be looking for price action based on current market dynamics, how price is currently moving, where price is delivering from, which is a really, really important part of how I trade, and where we think price is kind of heading next. So we want to establish what we think our draw on liquidity is, where is price heading for, to find those bigger liquidity pools that allow us to get ourselves aligned with institutional order flow, and also where we expect to see some kind of market reaction, okay? So starting out on this most simple kind of way to look at this, in fact, let's just start off with a completely clean chart, yeah? And then that way we can run through it for everyone, people that are familiar with the stream, others that maybe are not so much. Just pop this into a quick group on here. And guys, if you've got any questions, guys and girls, as we're going through this, please don't hesitate to ask in the chat. All right. Very, very inclusive community. Really great bunch here as well. So let's see if we can get all of these popped away. There we go. Right. So ultimately, what we're looking to do is we're looking to establish on a higher time frame where we think price is moving to, where it's reaching for. Ultimately, we're going to kind of zoom out on this one. And I like to look at the daily, gives us our real kind of key levels. For me, I'm looking for liquidity resting above old highs, yeah, or below old lows. And I'm also looking for inefficiencies in the market, meaning fair value gaps. That's these gaps that we get. 3 candle pattern when you see the wick of, let me just zoom in a little bit, a wick of a singular, this 1, 2, 3. The gap between this wick and this wick here is an inefficiency. So that's what we call a fair value gap. And then what we're looking for is under the principles of when price is running external liquidity, so it's running an old high, we're then looking for price, or an old low, obviously, we're then looking for price to rebalance one of these inefficiencies. So if we kind of zoom out to where we are here at the moment, I think something that's flown a little bit under the radar is this high right here. All right. So let's just draw this in quickly. We'll do that slightly thinner. Oh, we'll leave it thick, actually, because it's a weekly level. So for me, this is a swing high. A swing high is depicted by a high that's flanked by 2 lower highs, like this one. The same with this one. This high flanked by these 2 lower highs, which is confirmed on the close of this, the third candle. All right. So why is this an area that we want to target? Well, there's liquidity resting there, meaning that people that were short here, to give you a little example, let's say somebody decided to go short right here, stop loss above the prior swing high, right? Now, why is this important? Well, because when those stop losses get triggered, and in the opposite direction, when we get breakout traders trigger into long positions, what that does is that creates, what does that create up here? Liquidity, right? So for people that are short here, this turns into a market buy order. It means that we get this liquidity of pool of buy orders up here, meaning that large or institutional players can target these areas at points to which that they can fill very large position sizes and minimize slippage. Okay. So that's why we always want to monitor these areas. We don't just want to run into it and enter positions blindly. We're obviously using that to factor in. Now, something else that we want to look at is any kind of expansion leg that we have here. So from this swing low to this swing high is the current expansion leg. If we were looking for this in terms of a dealing range, it would be from this low, because this is the last low that swept liquidity. And then we've had this liquidity sweep by taking this high up here. So this range here is just a very simple 50% range. This comes from the teachings of ICT. I always recommend that you go to the source as well to make sure you're doing your own research on this. But it's the principle that we're looking at this from the perspective of risk to reward. And the risk to reward in this particular leg here, if we want to get long here, bearing in mind our next resting liquidity is there, then the risk to reward here isn't great, is it, right? So let's say we take a long position. Now we have to realistically put our stops below the prior swing low. So if we have to do that, and then we're targeting this high, we basically have a 1-for-1 trade. Yeah. Now, the other thing we have to factor in here is how overextended the move could be. Now, don't get me wrong, in bull markets as well as in bear markets, we can see here with the aggressive sell-offs that we see in these weekly candles, price really can just continue to drop without revisiting these fair value gaps right away. So while we're bullish, we want to remain bullish from a market structure perspective. On the weekly time frame, we have to be bullish. We're setting higher highs and higher lows. Market structure is very much with us, and we're still closing these up close candles. Now, last week was our first weekly down close, right? But it is natural for the market to breathe in this way, right? It's very, very rare you get these up only or down only situations. So all we can do is highlight the areas that price could be being drawn to. And there's two key areas here for me, right? One is this, which is our fair value gap on the weekly scale. So we're just going to draw that in. So FVG for fair value gap, and that's going to go W for weekly. And something else we have here as well is one lower down. Now, moving back to our concept of premium and discount. So the lower part of this range is our discount and the higher part is premium. And how we're looking at that is the idea that it's a better risk to reward play to go long from discount. And it's a better risk to reward play to go short from premium, right? Now, it can seem a little bit counterintuitive, which I appreciate, but once you look at the principles of it, and I'll show you a few prior examples. So the dealing range here, now this is a dealing range from here to here because we've taken liquidity below that low and also taken liquidity above this high. So as we look at this, we're looking for the expansion leg up. Now, before we get to that here, we notice that we set this high, we've taken liquidity above here. I'm interested once we close this down close candle, it shows us that we're possibly making a move into a corrective phase. We can then find the key fair value gap that lives down here in discount. Yeah, so the green portion of the box. And what we're ultimately looking for is for price to correct down to this area and then give us high probability setups, meaning that we've got a good risk to reward. We can then drill down into lower time frames and then get back in line with the trend. So that's what we're looking for at the moment. I'm not going to go into tons more detail than that at the moment, just to kind of outline the basics. If anybody does have questions, please do let me know. You can also find all of my weekly or bi-weekly live streams in the live section on the TBN, the Bourbon Nest YouTube page. So there's a lot of instructional material in there, but if you do have any questions, please do reach out. Quick question here from Wack. Hi, isn't there a massive SR zone between your two black lines due to an inverse fair value gap on the weekly from the end of March? Yeah, what a brilliant question. So for me, there's a couple of bits here. So this is particularly important, this area as well, Wack, which is a very, very good front run from you because we're just about to go on to this, which is the point of balanced price ranges. Okay. So let me draw this in and show you what we mean, first of all, by that. And we're going to do this in purple. So for those of you that look back, what Wack is talking about here, right, is we have this fair value gap. So forget this price action here. As this price action was developing, price did a couple of interesting things. So first of all, took these highs here. So we'll denote and we'll mark the highest of these. We'll do this in red so it just stands out a little bit differently. So when we're looking at price action and how price is moving, our expectation is for price to move from external to internal liquidity. So we think of this as price, when it sweeps a high, it's then going to look to rebalance a fair value gap. And the idea is that price kind of continues to move in that way. So external liquidity to internal liquidity. So here we've taken a high, which is our external liquidity. Before we saw this price action play out, because we're looking at a bullish fair value gap here, we were looking for price to hold this area here and move higher. Gold Mags, good morning. Right? So we've taken this higher, we're looking bullish, we've set a higher low, now a higher. We're looking at this area to act as support before price moves higher, but we don't get that. What happens is price actually closes below this fair value gap, inversing it, right? So that's where you see me put an FVGI. Now, when we get an inverse fair value gap, and that has to be a close below on the same time frame. So at the moment, we're looking at the weekly here, right? So we need to see a weekly candle close below it. Until that happens, this would be grey, right? Because it's a fair value gap. You'll notice on my charts, fair value gaps, bullish or bearish, are marked as grey. When we inverse them, then they go to purple. So as price then closed below this then becomes an inverse fair value gap. So we now mark this down as purple. The next important thing here, so the principle of this is when that happens and we show that weakness, that price is failing to find support here, the assumption is that price is then looking for liquidity lower in the form of these lows. Okay, so once we have that close below here, we then spend the following days intraday trading this lower, right? As we see here on the weekly chart, that's what's giving us our draw on liquidity. You'll hear that term. So a draw on liquidity is typically going to be an old high or an old low or a fair value gap. We cover order blocks and breakers, balanced price ranges and that as well. But what I want to look at today, or what I want to focus on, is actually how we can then trade these, or how we use these to our advantages to help us kind of get our handle on bias. So once we have the close below there, our expectation is for price to move down to the next liquidity, right, which is this swing low here. So that would be our ultimate target. Now, the next thing that happens, and this is really, really important, is when this candle closes, the sharp-eyed among you will notice that we've created a bearish fair value gap here, which I'm going to do in grey. I know it doesn't stand out particularly well over the purple, but so let me just do that a bit darker. Now, why this is really important is because this now creates a balanced price range, meaning that this fair value gap, has been violated by another fair value gap, but this time it's a bullish fair value gap being violated by a bearish one. So see how the gaps overlap one another. By doing so, they create a balanced price range. We then expect that to offer quite strong resistance. Now, what we can see here when we project this forward is that price is now engaging with that same level. So what provided strong resistance before? We were expecting it to be support. So you can hear this in terms of how you would hear a traditional support and resistance flip. We close below, allowing us to chase down to this next liquidity. However, when we confirm this fair value gap and balance price range on the close of this candle, you can see how this candle here ran back up to test this area and got an immediate and strong rejection, which was the catalyst and downward driver for price action to sell off more aggressively. Okay, so as we're looking at this now, the reason I've got my eyes on here and here is because in an ideal world, and this isn't from the ideology of whether I want Bitcoin to go up or down, purely from a price action perspective, I'm not trying to enforce my will on the market. From a healthy perspective, I would love to see something like this. Right? Price to drop back down, clear out. A lot of people are long at the moment. There's a lot of over leverage going on in the market. Price would come down. Now, let's imagine, for example, we get a weekly close below here. What that would do is, as we were just discussing previously, that would do two things, right? The first stage of this is this would become an inverse fair value gap, meaning we would be chasing price down to these lows and then down towards this. Because if this fails to offer support, then the chances are that price is reaching lower to find liquidity. Okay. However, if this does hold, and why I'm certainly not hanging my hat on that being the move that we get, because as you will typically see in bull markets, especially, the strength of the buyers stepping in, we can often see that these first inefficiencies are the ones that get targeted. So then the question comes where we're delivering from, right? We're not at this fair value gap yet. We are still delivering from this high and this balanced price range, meaning that as soon as price got into here and failed to close above, then we expect some kind of rejection here because a correction is healthy for the market. So I'm going to move this just to the side here so it still stays on there for anybody that's interested to look at it and realize why we've got the principles that we have. But at the moment, I'm looking for price on a weekly scale to reach down to at least here. Does that mean that's definitely going to happen? 100% not. Nobody knows what's going to happen in the market. What we're doing is we're overlaying a set of principles, techniques, and strategies that allow us to get a win rate that exceeds our rate of losses and therefore, build wealth over time. So now what I'm going to do is drop down to a daily, and all we're going to do is we are just going to focus on decanting those exact same principles onto lower time frames, right? So we can see here, this is our balanced price range on the weekly scale. Yeah. So let me write that in actually. So this was our fair value gap inversed, which also became our balanced price range, which is BPR. And they are on a weekly scale. So that's where our W comes in. So we expected to get rejection here. We didn't get our weekly close above. So what do we do here, right? Well, we overlay the same principles we talked about before. Now we're on a daily chart. We can see as price came up into here, we get the same scenario. We expect this to offer support. And actually, on a daily scale, this gave us a really nice day trade, right? Because price came down. Remember what we're talking about. Price took external liquidity here in the form of this high, corrected to internal liquidity in the form of this bullish fair value gap, and then to external again, taking this high. Now, as we then expected this to hold, right, we've still got other fair value gaps down here, right? So let's just draw this one in for a second. Now, when this candle closes through, it shows weakness in the form of inversing this fair value gap. However, what we want to be conscious of is that we're driving here into a bullish fair value gap lower. So I think this is where people often get confused, is they'll see this and they're immediately looking for shorts. Price isn't actually delivering from there. It's violated it, meaning we expect it to move to the next liquidity. If there was no fair value gap here, we would be targeting one lower, right? However, the fact that there is means that price is delivering from a bullish fair value gap. Until we close below this, violating it, then we would expect it to move lower. But actually what we've done is we've inversed this, meaning that intraday we're now looking, okay, are we going to get more of a corrective move? So while price is delivering from this bullish fair value gap here, we're looking for long setups back to this fair value gap here, possibly into this order block. When price reaches this, as it does here, our expectation then, again, unless it closes above, is that price is going to see rejection here. And our next key point is back down to this fair value gap. Why? Because we don't know at this point whether that fair value gap is going to support price again and it's going to rocket up, or if we get our daily close lower, if price is now driving down towards this fair value gap on the weekly, or possibly lower into this consolidation. So does that make sense, everyone? Please do let me know if it's not clear or if you've got any questions, because what I want to do now is drill this down into the 4 hour and look at how you can then decant this into looking at actual setups. Newman, thank you, mate. So great content. How do you know to draw that recent last fair value gap on the daily chart? So with the fair value gaps, right, you have to wait for the candles to close, right? So if we've got, so this is candle 1, this is candle 2, and this is candle 3 in this particular sequence here, right? So only once this candle's closed, so from this candle on, do we then validate that fair value gap. So once you've got that 3 candle pattern closing, then we know where we're looking to target these. We don't want to front run these, all right? And we certainly don't want to say, oh, okay, I think this is going to close. Because, you know, these candles can look like the most bullish things in the world and close very bearish, or close as dojis, and the same vice versa as well. Okay, so hopefully that answers your question. But when you're looking at fair value gaps, so a really good example at the moment here is this one. Very, very thin, yeah. And let me zoom in for you guys so you can see it. But basically, we can see the gap between this wick here and this wick. This is candle 1, candle 2, candle 3. However, this isn't valid until we get the daily close today, because there's always a chance that price comes back and actually balances this. As you can see happened here, we have 1 candle, 2 candle, 3 candles. No gap, so no fair value, meaning that the order pairing was done and that basically the inefficiency doesn't exist in the market. We're looking at this from the principle that price is always hunting this liquidity, right? So price is always looking to pair the orders, meaning that you have liquidity or major liquidity resting above old highs and below old lows. And if not, then the market is typically looking to breathe, meaning that it's moving to these fair value gaps and obviously order blocks as well, which do play a part. But I'll kind of build out into that in later streams, okay? But I do hope that answered your question. Ro, very much appreciated, my friend. So this is where we are, right? Let me just very quickly go back to the weekly, right? Just so that we can see and make sure we've got our context framed before we move on. We're asking ourselves where price is delivering from. Price is delivering from this fair value gap, bearish fair value gap, which is also a balanced price range, yeah? Meaning that then when that comes in, an inverse fair value gap when it's closed below, we expect this to offer strong resistance. We would want to see a close above, yeah, and a strong close above to then expect price to chase down these highs. If not, we're not saying the whole market's going to start crashing here, but it does seem like a really, really healthy place for a rejection, yeah? And a correction, sorry. Now, just to show you this quickly, if we look at this fair value gap and we overlay this here, see how there's this kind of stuttering of price action in here. Initial rejection, 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 till we close above it with this candle here, confirm it with this one, and then the expansion takes place. What you'll notice is, see how quick this expansion was? 1, 2 big weekly candles. Notice how there's no inefficiencies here on the left. That means that price can rip through that, right? And that's where we get those kind of strong moves. So that's how we've kind of framed our weekly thoughts. What we've then done is said, okay, if we're expecting a rejection here for price to draw lower, where could it be drawing to? And now we've marked up our fair value gap, the weekly ones here and here. We've now decanted this down to a daily, and we've overlaid the same principles. So we've seen liquidity taken here from this weekly level. We're within this fair value gap, balanced price range on the weekly. And on the daily scale, we've done the same. If we were going to move higher, we would have taken external liquidity and expected this to hold. It did. Price drew down into here and expanded up to take this higher. Then it closed below here. And again, just to re-emphasize this, I see a lot of people kind of get this wrong. They kind of see this close below. Yes, we've inversed the fair value gap. Are we going lower? Or the issue that we have is we're now delivering from this fair value gap on the daily. And let's always remember our high time frame bias is we're still bullish at the moment. Okay, so while we're still bullish, we're delivering from this, then this is what needs to be respected. However, only to our next target. And our next target is this fair value gap, right? The bearish one that's here between this candle and this candle, but especially now this balanced price range. Yeah, this inverse the fair value gap, the fact that we've got a fair value gap here and now overtaken by a bearish one on the close of this candle means that this is why we've got the red arrow, because we're looking for shorts lower down. If we now move to our 4-hour chart, by the way, I'll just turn these off quickly to keep it cleaner, but the lines going down the chart here for people that don't know are our session breaks. You can get to them just by clicking on your settings on TradingView, go to your events tab, and then on here, session breaks. You can turn them on and off. It just shows you the line for the midnight change, which I obviously have set and is taken from UTC. So here was our green arrow. Right? So now we're looking for long trades in here. we can look at this on the 4 hour. Obviously, we're going from a daily to a 4 hour. If we wanted to move to sort of an executable time frame, we'd be looking more towards the hourly. Okay. But just to always get your framing on where the 4 hour sits, because see how a lot of these areas and inefficiencies overlay with the higher time frame with the lower time frame, meaning that it allows us the opportunity to get involved in the trades. So with the 4 hour, we're looking again for highs and we're looking for lows, and then we're looking for our fair value gaps, because we're looking for this to be where price is going to deliver from. But what we want to do, and I want to do this on the hourly because I want to look at something a little bit more for the kind of swing traders. I appreciate I do a lot of stuff on the lower time frames. Let me just turn that off. So when we're looking at our green arrow down here, yeah? So now within this, we're now looking for reasons that we would get long. So we can look for market structure breaks, for example. We can see here, we break structure here. Price comes up. We've got a little internal high here. Let me just zoom in for you guys a little bit. So price is drawing down. This is the trigger that from this day onwards, we want to be looking for bullish setups. What we're now looking for is the fact that price is delivering from this fair value gap. What can we use as an aid to help us? Well, if we want to just keep things really simple, and that's how I like to do it, let's go back to our old friend, the inverse fair value gap. Why is this important? Because it's a show that this should be offering resistance. But when we close above it, as we do with this candle here, it flips to an inverse fair value gap, meaning that we expect it to show support, right? And then what we would do here is my main target would be price running to this. Now, let's just say, for example, and you would move to a lower time frame in order to refine your entry here, right? Meaning that you would be targeting an entry in this area. And I'll go on to explain this in future sessions. Myself, personally, I trade within kill zones, so time specific, aligned with the London and the New York trading sessions for traditional markets, meaning that this move here, for example, would have been outside of my trading session because this would have been Asia. These blue dots at the bottom denote New York PM, New York AM, and the two orange dots are London, okay? As we move on to lower timeframes, they become a lot more relevant. If you were an hourly trader, what I would suggest here in terms of a move is the same as I would look for on a lower time frame, is you want to be looking for some kind of sweep to induce liquidity. Meaning the thing that's a little bit difficult here is unless we chase this trade by entering a limit order or a market order, when we close above, yeah, the absolute most aggressive you could be with your stop loss is here, but in truth, it should be there, right? And then your target is here. Right, it's a 1-to-1, yeah, so it's not the greatest risk to reward. However, what you'll notice is if you had taken that trade on there, and ultimately that would have been the point that I would have moved my stop loss to entry, but I would have been chasing this higher. I would have been looking for the highs up here. We can see we ultimately didn't get those, right? But what it would have allowed us to do is enter a trade where by the time our initial target's hit and we can take a little bit of profit at 1-to-1 and move our stop loss to entry, price comes down and takes us out, but we don't actually lose anything on the play. It's a quite nice risk-averse way. That's the model that I use on lower time frames. However, I think the better play here would be to wait for some kind of inducement of liquidity. And what I mean by that is you typically want to see these moves start with a local sweep. So we've got price delivering here from our higher time frame fair value gap. We're expecting that to offer support. There's a few different things that we can do here that are going to give us an indication of when price is ready to move. One of those can be a change in the state of delivery, meaning that if we've seen this sweep here, yeah, we've got these consecutive down close candles, right? Now, whenever you've got consecutive candles like this, you always want to make an allowance for all of them combined. So from the top of the body here, this is where we would have needed to wait for our change in state of delivery, right? However, as we're going down here, what do? We don't overcome it here, but we then set this down close candle here. We just do that in blue so that doesn't get too confusing. This means that while we're setting these down close candles and failing to close above them, we have to expect and accept the bearish pressure on the market, right? Now, in the same way that it was here, you've got all these down close candles, right? So closing above this would have been an issue, the top of these bodies. Once we set this, however, and we close above, it's an indication that the market is getting ready to move higher. So what we can do is move on to lower time frames and then look for corresponding confluence. What else can we do? Back to our good old friend, the inverse fair value gap. This, which should be suppressing price here, because we expect price to draw into that and sell lower. We didn't expect that here because we got this close above that showed us some strength. We also remember that we're delivering from our higher time frame fair value gap. Just going to mark that in as well for a second. And what have we got? We've got our sweep on liquidity, right? We now have this bearish fair value gap violated here. All of a sudden, if we use the same entry technique, and even if we just market enter here, well, now we can be more aggressive with our stops. Why? Because our swing low is now here, being defended, first of all, by the order block, the down close candle before price is moving away, as well as these down close candles that we expect to defend price. This has given us the indication the market's showing strength. We've changed state of delivery from bearish to bullish. All of a sudden, that to our initial target here, which is this high, where we move our stop loss to entry, gives us a risk to reward of 2 to 1. That is a lot more appealing because what it allows me to do, it allows me to still target higher because my conviction would still have been for price to move up because we've got all this liquidity resting above these highs here, right? However, remember what we said. We're expecting a rejection at this, our daily, which is this purple box here within the larger weekly one, because it's a balanced price range, right? We're still expecting a rejection here, no more so than where we drew our red arrow, right? To just popping back to the daily again, just to always remember the context. You always want to be moving back to your higher time frame. So yes, we were bullish here, but we were only bullish until we interacted here. Remember, we need the close above on a daily scale. Until we get that, we're expecting the market to move lower. So now we're back on our hourly time frame. It allowed us to say, okay, look, if we're wrong here and we do get this close above, or if price does run hot, because on an hourly scale, this could still run and take this liquidity, but still retreat and not get a daily close above, right? So it allows us to take that. Now, that's a lovely trade, 5.3R. You can take profit as you move up. Ultimately, I think what I'd be looking to do, or not think, this is exactly what I would do. I would take this higher time frame inverse fair value gap and balanced price range, and I want to know the middle of it. So that's what I'm interested in here, the equilibrium. So then I can say, okay, where I'm going to take the majority of my profit is here. 2.8R, nice return. You can leave 10, 20% of the trade in case price does run hot. But ultimately, what we're really looking for here are for our triggers to say, okay, price is now getting ready to go in the other direction. So if we now overlay those same principles again, what's happening here? We're bearish here, right? Because we're delivering now from a bearish array, meaning that it's somewhere that we expect to see rejection. So what do we want to see? Well, if we're looking in the same vein that we did before, we either want to see some market structure shift with displacement, or if we stick with our inverse fair value gap, then what we're looking for is a bullish fair value gap to fail as support and then to look to flip to resistance. So while we're patient, we see we get this violation here. When we see price come back above here, so if we were employing the same principles as we did here, we get our close below here. We would look to market enter on the close below. Remember, the price swing high, which is this high, there's none down here, none there. This is the candle that's flanked by two lower highs. That's where our stop loss goes. I would then be looking at this low here to move my stop loss to entry. And ultimately, as we said before, our expectation is this to be our main target, meaning that I would again take the equilibrium of this, meaning the 50%. Because these two are so close together here, I think what I would do is I would be patient. I would wait for this one to come back down as well, okay? So I hope that's taken that from a weekly to a daily to a 1 hour, a triple screen system that's more for swing traders. Normally I focus a lot more on the lower time frames on here, but this is all fractal. If you want to trade the lower time frames and you want to do something like a daily, a 1 hour and a 5 minute, I can show you some setups on those as well, or the more aggressive scalping systems that I use, which will be a 4 hour, a 15 minute and a 1 minute. The idea is that we're looking for the overlay of these same patterns. Strength to show weakness, weakness to show strength, playing to our internal and external liquidity targets. So I'm just going to look through a couple of the questions, guys. Hopefully that's been clear. If you do have any questions, please do pop them in the chat. We got a nice amount of time now that we can cover off any questions anyone has, or maybe if there's a particular chart you want us to take a look at, we'll squeeze a couple of those in towards the end. Ricardo Ruiz, hello, mate. Very good week ahead to you as well. Pithra, thoughts on the CME gaps? There's now one above from last week's. Really, really good question here from Pithra, or really good point here about the CME gap. So I don't know if not everybody will be kind of au fait with this, but the CME, obviously in terms of trading, you get gaps on there, and you'll often hear people say, okay, well, how are they treated? Basically, what you're looking for with any kind of market inefficiency, and typically what happens with CME is when you get a contract end, or you get price go over a weekend period when traditional markets are shut, then you can have gaps in price action, exactly like we see with the fair value gaps, except actual gaps where there's no candles at all. Any market inefficiency like that, Pithra, I approach like a fair value gap. I'm looking for how and when the market will want to rebalance that. And let's say we've got the CME gap at the moment and price has left, or let's just say, for example, we've got a CME gap below us and we've taken a higher, then I will look at that CME gap and I'll say, okay, is that the most logical point for price to return to rebalance? You can find that they're a big draw on liquidity. Think of it in a way that the gaps need to be kind of filled by the market makers to make the market efficient, which is why there's such kind of a reliable draw on liquidity. But really, really good question. And Goldmax, if the weekly fair value gap and the daily fair value at similar size, would that indicate stronger pull to liquidity? Yeah, really good question, actually. So what it's more a case of is you're refining down, right? So if we go back to our weekly quickly, and we've got this balanced price range, right? So we're going to look at this balanced price range, the big purple box here, and also this grey box here. So we're looking at those and saying, okay, this is really this is the high time frame. We're asking ourselves, where's price delivering from here and where's it reaching for? So while price was down here, it seemed pretty obvious that price on a weekly scale was reaching for this. Once we got above here, like I said, we closed this candle here above this fair value gap, meaning that this was all balanced, meaning that the next point that price can run for is this higher and also this balanced price range and bearish fair value gap. Now, that's in the same way that we're looking at this corrective move lower, that this fair value gap here on the weekly is the most obvious target. Now, when we drop to a daily, so the first thing to say is the time frame that delivers the singular fair value gap is often the most powerful, meaning that here, for example, so you've got a fair value gap here and also here, but obviously on a 2-week chart, that would just be a single one. What you would do is use that and then you would drop down the time frame, which we're going to look at here and here, to find overlaying fair value gaps that align with that same narrative, right? So within here, our balanced price range, this is obviously too large an area, really. So we're looking to refine this onto the daily now. And we're saying, okay, if we expect a rejection here and we want to work with our inverse fair value gap principle, let's wait for a daily one to emerge in here to confirm the rejection. Then we can be fairly confident that price is moving lower. And in my opinion, down towards this, which is the next logical target. So what do we do here? We say to ourselves, well, price still needs to get through this one here on the daily. So we still respect that while it's here. However, if price is going to come back down into this area, then where's it most likely to overlay on this scale? Let's get rid of that for a second. And then we would look for our fair value gaps here on the daily that overlie or lay across, sorry, a bit more accurate terminology, the larger existing one. And it just helps us like a sniper kind of dial in to a more precise point. Okay. And that's where we would watch for there. And ultimately this below. Another thing to say, which actually I don't really cover a lot on the stream. I try not to make them too convoluted because I was very fortunate to be an early stage student of ICT. I think he's absolutely magnificent, one of the best educators in the space. There's a lot of information though, right? And the idea isn't to try and kind of teach it all or absorb all of it. It's about finding systems and certain parts that fit for you. Some people, for example, like to take displacement entries, which means you need to see a market structure break, leaving a fair value gap to show that there's buyers stepping in. Other people like to take early stage entries using these inverse fair value gaps, etc. It's just really a case of what works for you. So if there is something that kind of resonates with you from the stuff that I say, then please do reach out, ask me questions about it. I can do deeper dives on shows. And I can also point you towards the original source of the material, which is what I learned many years ago and have kind of adapted along with teachings from people like Trader SC and others over the years. So in terms of kind of answering that more directly, I would look for the larger time frame, fair value gaps, highs, lows, and then move down through the time frame respectively to kind of refine them down. And yeah, why not? Let's close the show. Let's do a top down on ARB, shall we? Is it Pahadi? Probably absolutely murdered that, haven't I? Apologies if I have, mate, but absolutely. Let's take a look at ARB. And this will give us a nice opportunity now to just, for me to show you how I would just do this top down. Yeah. So looking at this as a new asset, okay. Let's have a look at ARB. Because, at the moment we've got these pullbacks, we're in very bullish market conditions. I'm not saying go out and buy stuff at the moment. It's not for me to advise you. But for me, I'm looking at that at the moment. And, over the last week or two, people have really been crying out saying, I wish I'd bought this. I wish I'd bought that. So it gives us an opportunity now to kind of look at the charts and say, okay, well, let's make a decision then. And let's look at where these good areas can be to buy, if that's what we want to look at. And we can also then take a deeper dive. Let's get rid of these and look at how we can get some intraday trades as well. So just do that as recent. Beautiful. You're welcome, mate. You're welcome. Let's take a look at that. And okay, we'll do also link as well. And we'll cap it off at there, guys, right? We want this to probably be about another 10 minutes to stream. So let's do that. And we'll also take a look at link. All right, top down on both. And yeah, link was definitely one of the early movers. So we're going to run through this at a reasonable pace, but please do stop me if you've got questions, okay? So we're going to do exactly the same. We're going to move back to a weekly and we're asking ourselves, where is price delivering from? Where is it reaching for? So the first thing that I notice here is that we've taken this higher. Right? Now, we failed to displace above this high as well, meaning that we haven't got it. If we'd got a close, we got one of these candles that had a nice bullish close over the top of it here, then I'd be looking and saying, okay, well, maybe price is actually reaching a little bit higher for this next high that's up there. But we didn't, yeah? The wicks tell the story. We can see price coming in here. And now ultimately we've taken external liquidity here. So we would be looking for internal liquidity. Now, the first fair value gap that we can see on a weekly scale is here, which is quite a deep correction down into here. Also, when we do correct down, right, as long as we leave this low untapped, we do also have these lows down here. So what we want to do now is say to ourselves, okay, on a weekly scale, we can see where price is moving here. Let's move down to a daily scale and try and refine where we are. So here we can see the rejection in a little bit more detail. Once again, we can see the inverse fair value gap on here. Right, now, price did violate this here, right? And in doing so, on the same candle, took resting liquidity, not just below this low, but below this low as well. And I think maybe even this one here, which is really, really important, because that should always play a part in then how we're factoring in our thought process moving forward. So yes, we closed below this here. If we closed here, but the wick had only come to here, I would have expected us to chase at least this. But in the close below here, we wiped out all of this. So there's no surprise to me at all that we got this bullish reaction. Just move this back a little bit. So while we watch this unfold, we can see quite clearly here that we've taken this higher. Yeah. Now, price has kind of violated this again, now back below it once more. It's not the cleanest price action in truth, and I would imagine it's because a lot of people are looking to step into the markets at the moment and buy, right? So here, bullish, failed, got back above it, Am I paying that much attention to this at the moment? It's one of, if not the clearest thing on there, but it's just been violated a few too many times for me, and therefore it kind of loses its purpose a bit. So now I'm back to saying to myself, okay, well, how are we confirming the state of delivery for price? Yeah. So if this is our down close candle here, we see we've got all of these. This up close candle here is of interest. So on this scale, if price should close below this, yeah, so get our daily close below this, it's an indication to me that price could be looking lower. And actually this kind of weekly fair value gap then comes into play. Again, though, when we look at this, you see how it's kind of a little bit muddied, right? Price is kind of trapped in this range here if we think about it. So if we look at this and we take a fib, now this would be like an expansion range, right? Price has come up, set this high, and come down and set this low. So if I was looking at this as a range trader, and let me do this actually. Right, so we've got our equilibrium here, and what we can see is we've kind of focused here on the midline. Let me take out the 0.25 and the 0.75. Now, we can see here what's happening. Price comes down, finds support on the midline, closes below, chases liquidity lower. Ultimately, gets bought up here, I would imagine, to do with this consolidation here, not to mention the fact that we've kind of, this would be mitigation, right? The up close candles in here, focusing on this last one. Yeah, this, which set the order block that took liquidity before price sold off. Rejection, rejection, strong close above, treated as support. Price moves away, comes back down, finds support again. Yeah, it's what we would call an area of mitigation, meaning that we're looking for that to provide resistance. It's kind of a little bit like an inverse fair value gap where you get that kind of flip. Price comes above, retests it, shows us strength, moves away. When we revisit again, it makes sense to say, okay, if the buyers stepped in here and here, maybe they're going to step in again here, and they do. With the principles of the range, we trade from the lows to the highs. What we're looking for, and the master of this, in my opinion, is SZ, and you'll hear him say this. We've got our deviation here. Price comes back in the range. We sell off. Where do we target first of all? Midline. If we now hold the midline here and show rejection, then we expect price to move lower, in which case we either get this deviation at the range low. If price then steps back in, yeah, then we would expect price to move higher. We would look for it to build a base here. We would once again target the midline, and then we would target the highs. These are all liquidity concepts, and I do really recommend checking out people like Trader SC, Trader Dank, who's exceptional as well, and also people like Razoon, who's a fellow team member of mine over at the Nest, who uses that really well combined with volume profile. But before I digress too much, and so we can still obviously fit in link at the end as well, we can see that this is a little bit kind of muddied at the moment on a daily scale. So all we need to do is we just move down through our time frames, and now we're down onto the 4 hour. And we can see on the 4 hour how this is kind of, the picture's becoming a little bit clearer. So focusing on recency and where we are today, well, this low is definitely playing a part. Just do that in pink so that can stand out a little bit more. Okay, and now we can see, because the low there, again, same principles, we've taken key liquidity here. There would have been stops resting below. Yeah. Ultimately, as we move back to our range, this is internal liquidity, not in the terms of a fair value gap, but in terms, if we're looking at that from the high to the low, being our current dealing range. Yeah, because this was the key move up here, took liquidity from the lows, took liquidity from the highs. So if we take that low and take to this high, when we do that as our premium and discount range, we can actually see why price was favoring short setups here. Yeah, and now as we move back down into this, we're starting to, promote longs, right? Purely from a point of risk to reward, right? Doesn't mean we get it or not. But what I would say is you can just overlay some real simple principles and say to yourself, well, okay, price does hold here. How can we then think if we're going to move this higher? Well, if we're doing it on a 4 hour basis, if we want to see refined strength here, we've taken some lows. We have this fair value gap here that we expect to reject price. So price will either return to this, we find a rejection on a lower time frame, and then we look to move lower. Or if price inverses this, right? So we close through it above, we can look for it to come to here, and then we can just play it level to level, right? Tracking down all these highs as we move higher. Obviously, as we take these positions higher up, we want to be more cautious with our position size purely on the fact that our risk to reward is getting less. But that's how we can use these to generate confirmation setups, all right? So we don't just have to place limit orders at levels blind and think, okay, there's an expectation for the market to move there. That's not to criticize anybody that does that. There's some magnificent traders out there that have those systems. It's just not how I trade. I like to target a key level and then look for confirmation. Okay, and what we're going to do as we look at Link now is I'm going to show you a couple of those setups that I'll be looking at today on the lower time frames as well. Meta Shaman, hello mate, good morning to you too. Thank you very much. Devozeg, where can one learn all these concepts and principles? Yeah, so like I said, the source of the information in terms of the real library of it, where I've learned is from ICT, the Inner Circle Trader, Michael. You can find his stuff on YouTube, Twitter. Huge following. Make sure, obviously, do your own research. Make sure you're following the right person. There are some scammers out there, unfortunately, some of them with huge accounts. But he's got core concept mentorship programs that are available online. He runs a paid mentorship as well, which I think is closed now as he's looking to kind of, step down from most of his responsibilities. My concepts are heavily steeped in his teaching, so you can find my content and information. I'm a trader and member of the Bourbonest community. You can find links in the description lower, so come and check us out there. You can get free trials, free access to calls, and loads of bits and pieces. But also, I've got some free content on YouTube under the live shows, so do make sure to check that out. And any questions, just hit me up, and I'd be more than happy to kind of point you guys in the right direction. And then Smock 88 is a possibility of STX and FET. I'll try and squeeze in a couple of minutes on one of the two at the bottom, mate. We're just going to switch on to Link, and then we've got about 7 minutes left. So let's rip through Link quickly, and if we do have time, then I'll pop over and have a look at FET for you quickly before we close it down. So where's our old friend Link? It's been on our watch list for a while here. So we can see from some of our old TA here that we've got, where we've been looking at Link for a little while now, these kind of similar principles, right? That we were marking this was a high time frame level, rejection. What happens? Close above it, retest it as support, no close below. You can see how these areas, these kind of pivot points can be so important in the markets. This is just a high time frame level that our expectation is for price to find rejection, yeah? Until it stops finding rejection here, which is here, then we start targeting liquidity higher. In the same vein, we expect once it's flipped, as we would do this and then we would move this. We expect this to offer support. We're not getting these closes below, right? Then as we come down, then as we do lose this and we come back, again, this is resistance until proven otherwise. All right, it just kind of really shows, for me anyway, the kind of how important these kind of concepts are, because it can just bring a lot of peace and clarity to you when you step to the charts. It gets rid of a lot of that anxiety. You just say to yourself, where's price delivering from? Where can it be reaching for? As we look at that, we can then say to ourselves, okay, we then frame the trades around it. And I'll just try and show you a couple of those quickly before we log off from the stream. So let's just get rid of that. Let's go again to our weekly chart. Let's just rip a quick top down. Right, so we can see here again, a lot of crypto is going to look fairly similar at the moment. I think they've left some kind of key untapped highs here, which is always a good sign that there's liquidity up higher. We have taken this swing higher. Okay, so that's why we'd be seeing this current rejection. Again, you'd want to see kind of like a close above this really if you wanted to chase up to this high there. I think we're going to get a little bit more information as we drop down here to the daily. This is a really good example, right, of how we're kind of targeting this. This is green. On some of my shows, I'll do the bullish fair value gaps green, especially if we've got a lot of new users. But to show that this was the area we were saying, okay, we would want price to dip in. We can see if we actually draw that accurately here on the daily scale. That low to this high. We left this fair value gap. Price touches into this in the extreme bullish conditions that we've got. That's why we make an allowance for those ones that are higher as well, because we would have also had this fair value gap on our radar with the expectation that if we close below this, we'd be driving deeper down into this one. But we can see here the market conditions were just too bullish and we had this immediate reaction and price really took off. So where does that leave us at the moment? Well, for me, I know I can sound a bit like a broken record, guys. I hope it doesn't get too boring for you. But, these inverse fair value gaps do tell us a lot. Again, the thing with this one is we've run down and we've taken that low. We've taken this low as well. So we would expect to see some kind of reaction here. But what's our expectation, right? We don't need to enter on this one. If we closed here, or, we hadn't wicked down and taken this liquidity here, here, and here, then I'd be thinking, right, we chase this down. However, we've taken external liquidity. So remember that our theory then is price is then moving back to take internal in the form of a fair value gap, right? So price comes down, takes external liquidity below here. We're now expecting price to rebalance this from internal to now come back and take external, which are in the form of these lows that are left here, or potentially these lows lower down. Again, we don't know which ones that they're going to reach for. They could react at any one. So it's very, very important that we monitor them and then look for our setups accordingly, right? So there we are on a daily. If we take a look at the 4 hour quickly, we can see price's reaction in here. Again, if we're looking from this in terms of a change of state of delivery, well, quite simply, when we have this, we're looking for these up close candles that are showing bullishness to be closed below. So our change in state of delivery happened here at the base of this, which we'll do in blue, meaning that from the close of this candle, meaning from this here, we were once again looking to chase price lower, and we had this beautifully ready-made low down here that actually then became equal lows. Yeah, which we can see that low and that low are equal, so they make great targets. Ultimately, price is doing what again? Coming down, taking external liquidity. We're then coming back to internal liquidity in the form of this fair value gap, where we expect a rejection. So we're looking for a short bias here. If we closed above it, then we think price may correct a bit higher, right? But it didn't. It closed below and now it's shifting lower. So in terms of the 4 hour, I just want to focus on recency, right? I think we've covered enough kind of with the historical days, which is really interesting and fun. But let's look at what price could be looking to do now. That low down there interests me quite a lot. We have just taken this low, so we're seeing a rejection here. Now, if we haven't got a fair value gap to work with, then we can look at order blocks as well, right? And order blocks can be really key. I'm always a little bit cautious around order blocks because, it takes a little while to kind of get your eye in with these type principles. Otherwise, you just end up seeing things everywhere. But ultimately, if we're bearish, then we expect our up close candles to defend price. Yeah? Hey, there's recency. Erica knows the score. Did Congress recently, and just a really amazing trader was on there, just a real veteran of the market that I was interviewing, who just completely tore the principle of recency apart. Not in a disrespectful way, but in terms of his strategy on a long-term swing system, which I understand. But it did make me laugh when Erica, bless her, jumped on the stream and was like, BC really loves recency. It's like, I really do. But for me, these are the things that can tell us a lot, right? Because the way that I trade, very, very different to this gentleman, is the idea that, look, these up close candles, they're our bearish order blocks. They become valid once we close below. Then we're looking for these to defend price. See how we get this here? Fair value gap. Within that, we form this order block, which is this blue box. It's the base, it's the bottom of that body to the top of the wick. I'm allowing for both of them because they're adjoined, in the same way that I'd be allowing for these realistically, which would overlay this as well. So price came up here, we found a rejection, price sold off. So we're now looking at this. So where is price delivering from? And we're always asking that, where is price delivering from? Price is delivering from this bearish order block, these 3 candles. So now if we move down to a lower time frame, say like a 15 minute, and we were looking to chase these down to our lower liquidity targets, I would want to do this within one of my trading sessions, which we're outside of at the moment. However, I would be looking in here for similar things: sweeps, breaks, inverse fair value gaps. So within London, we can see, unfortunately, we just got it. We did get a setup here in London. We had this one. That was our inverse fair value gap. this is a very crude kind of, obviously we would drop this onto a lower time frame and look for these setups as well, right? This one here would have been the key one for me. And let me tell you why. So when we set this inverse fair value gap here and price closed below, what I didn't like about going short here is the fact that we're delivering from a bullish fair value gap. Yeah? Where here, when we violate this and close this candle here, we're not delivering from a bullish fair value gap. We haven't reached this low yet. And it's important because this low has to be my first target, right? So as I chase this down, and this would be just showing you this as a low entry form technique, but this obviously with price being fractal, this is repeatable across different time frames, right? So just to show you that again quickly, let's mark it with an arrow so you can see the close. We had this here. We closed this candle here, meaning that if we were chasing, we would have to chase this candle here, with our initial target being this low. It's at this low, I would move my stop loss to entry to mitigate any risk. Ultimately, price comes up and does take this out, right? But it's fine because we've either trimmed some profit here as long as we've got a good risk to reward, or we're certainly aware that that's the first most logical place for us to be wrong, meaning that if price isn't reaching lower for this and rejects, then we want a way to be able to get involved in this trade, right? By mitigating our risk. So when we're here, we have to work out if this trade would be worth taking. So first of all, there's no inverse here. So this is the red arrow. This is the point at which we can go short. We don't have any inverse. We don't have any displacement. Price just runs down and takes out this low. So it doesn't give us an opportunity to get short, unfortunately. If we were looking at something like this, which happened outside of our trading session, but where we've swept a key higher, yeah, so we have a high time frame play to work with. We have not only this here as an inverse fair value gap, we also have this here. And I again like the lower one because when we close below this, we've also filled this fair value gap. When we close below this one, we're still delivering from a bullish fair value gap there on the left, yeah? As we close here, we can then look to chase down below these lows, which is where we would move our stop loss to entry. Our entry would be the close of this candle with our stops above the swing high here. And then you've got to say, okay, that's a pretty poor risk to reward if it does go off here, because you've still got to cover your trading fees. But ultimately, that's why you want to zoom out and make sure that your targets are based on a higher time frame. Yeah. So for example, with these, if we were short in here, our first actual stop would be here. Because can you see how this is the swing low? This low here? And that's where we want to always be cautious if we're moving down onto two lower time frames. At the moment, down on the 5 minute, we can see price having a little bit of an expansion higher into this. So if we kind of drive out to a medium time frame here, and let's just very quickly just get rid of this. On our hourly, what's looking quite interesting here for me is this. This is what's currently capping price. Yeah. I think what we can see here is when we kind of inverted this fair value gap, which was with this candle, unfortunately, we'd also taken the local highs. So price has kind of come back down. So now we're not as concerned at that. We've got our higher time frame targets resting up here. If we can now get a strong hourly close above this, then I'll start looking to this higher. Yeah. So hourly close above here, drop down to a lower time frame, find either something like this where you get a sweep of a low, a market structure shift. Okay, and you can enter on the break of that, or you can enter on a retrace to a fair value gap. That's a good way to get back involved in Link at the moment as well. Gold Mags, you're very, very welcome, mate. I'm glad it was enjoyable. Let's take literally a 2 minute look at FET for our friend Smock 88 quickly, and then we're just going to wrap it up. Actually, I've got FET on here, haven't I? So for this one, I'm going to look first of all at a daily because I want to be able to frame where we currently are, where price is delivering from. We can see here at the moment, FET is holding this nice fair value gap here. So on a daily scale, we're delivering from a bullish fair value gap, right? So that's important to note. And I move down to a 4 hour, which is where I want to refine this down. I'm saying to myself, okay, well, What's the key thing that's suppressing price here is this fair value gap, the bearish fair value gap, right? We can see what happened was price drove into this internal liquidity, came out and took external liquidity here in the form of these lows. So I would either want to see price close above here on a 4-hour scale to start chasing down these highs and then moving higher. If not, at the moment, we're currently kind of seeing the rejection. If we want to be more aggressive with this and kind of refer to more of an intraday, we can see that we've got a little bit of momentum at the moment here. We've just kind of reversed this. We've flipped that bearish fair value gap. We've closed above it. We have these immediate highs here, which become a target, followed by this high up here as well. If I'm then going to move to a 15-minute, we're asking ourselves, okay, where is price delivering from? Price is delivering here from this bullish fair value gap. So at the moment, my expectation would be for price to kind of come and take liquidity above these highs. We've got these kind of equal highs here as well. Provides a nice liquidity pool. My assumption is that we would see something like this where price will either get up above it, it will reject if it is going to move deeper, or if price is actually going to be looking to move higher, right? Then I think if we see this and we see price kind of get back above this, I do think that we're kind of move on liquidity higher up. We also know this grey area here is a previous point of rejection, right? So as we were in here, you can see as you get onto the really low time frames here with some of these crypto assets, they can be a little bit gappy. So what I would say is this actually refers to what the gentleman was talking about earlier about the CME gap as well. You see it much more like that. But basically, if we were using our inverse model here, unfortunately, the price action here is a little bit ropey. But remember, we're delivering from this fair value gap, right? So we want to see a sweep, which we get down here. We then want to target this area here, which is a volume imbalance, as well as obviously a gap, right? You would want to see that closed above. We kind of got a high close here, so it would be a little bit of a late one to chase because this is where price could turn around here. But all we're doing is we're taking the same concepts we would do on a daily or weekly. We decant that down onto the lower time frames, and we can find these either aggressive or more kind of conservative setups. What I would say to everyone is, if you're going to look at these kind of things, really good time frames to work with are a daily, an hourly, and a 5-minute. Yeah, meaning that you use the daily to find your fair value gaps and where price is reaching for. What's the order flow? Then you use your hourly to frame it, to find those gaps where price can be reacting, where it's delivering from, and then your 5 minutes for your entry. Or you can use a 4-hour as your framing and a 15-minute for your fair value gaps, and then a 1-minute or a 2-minute chart for your entry, which is exactly what we've done here. Had this been within our trading times, we're about 20 minutes away from our New York start. I would have loved to have taken a trade like this. I wouldn't have taken this one. I tell you for why. If this had closed here, this candle, then we could have had a lovely move here. And what would we have got out of that? A nice 1.6, 1.7 R, right? As it comes in and flies away. However, unfortunately, where we got this gap, because it's just a bit low on liquidity, we wouldn't have wanted to enter there, right? Because our risk is down here. We've got a 0.5 R. Although I do feel like, we're taking that out. As I said earlier, I think we're reaching up for at least this high here and maybe back towards this grey box as well. All right, guys. Look, thank you all so much for your time today. I know we've run over a little bit, but I do think it was a really productive session and we did manage to get a few charts in there. For any TBM members or anybody interesting, you can find some information down in the description how you can join us or join any of our partner exchanges to get some of our benefits, like people with Prime XBT. I think giving away like up to $7,000 in deposit bonuses at the moment as well. But you've also got to have information that's for free. We've got a public service as well that's at the Nest as well, a very education-based community. You can come along and grab my live streams as well. But I will also be doing live trading sessions starting this week with the Nest members in a little build up to Christmas. And just want to say a big thank you to everyone. We had hundreds and hundreds of people on the stream today, which was awesome. Just wish you all a fantastic run up to Christmas. If I don't catch you before, have a wonderful time with friends and family, touch some grass, whether you celebrate or not. Really, really wish you the best. And I'll be back on Wednesday. And like I say, for anybody that's around the Nest, do come and pester me because I want to get a few live trading sessions in with you all as well. All right, guys, wishing you all a fantastic day. Trade safe. Remember to keep an eye on the news as well for any key red folder news events. And I look forward to seeing you all on Wednesday or around the Nest.